Insurance is a scam. Have you ever heard someone say that? Maybe it was a friend whose claim was rejected, a relative who felt an insurer treated them unfairly, or perhaps it was a viral social media post that attracted thousands of comments from angry policyholders. But have you ever noticed something interesting? One negative insurance story can travel across an entire country in a matter of hours. Yet thousands of successful insurance claims happen quietly every single day without attracting any attention. But why does this happen? That's exactly what we're exploring today. Stay with us as we break down the causes, the misconceptions, and the lessons every policyholder can learn. Hello and welcome back to Insurance World TV, the channel where we simplify insurance, personal finance, risk management, and wealth protection so that you can make better financial decisions for yourself and your family. If you're new here, thank you for joining us. And to our returning subscribers, thank you for being part of the Insurance World TV family. If you haven't already, please take a moment to like this video, subscribe to the channel, and turn on notifications so you never miss our weekly insights on insurance and financial literacy. Now, let me ask you a question. Have you ever heard someone say insurance is a scam? Or perhaps you've heard a friend say, "My claim was rejected, so I don't trust insurance anymore." What's interesting is that many people can hear one negative insurance story and immediately conclude that the entire insurance industry is fraudulent. Yet they may completely overlook the thousands of successful claims that are paid every single day. Why does this happen? Why do negative insurance stories seem to stick in our minds longer than positive ones? And could our own psychology be influencing how we view insurance more than the actual facts? Well, today's topic is not just about insurance. It's about human behavior, decision-making, and one of the most powerful psychological forces that shapes our opinions without us even realizing it. Today, we are discussing confirmation bias in insurance, why one bad story often drowns out 1,000 good ones. By the end of this video, you'll understand why our minds naturally focus on information that confirms what we already believe, how this affects perceptions of insurance, and most importantly, how to make smarter financial decisions based on facts rather than emotions. So, grab a cup of tea, settle in, and let's dive into today's discussion. Chapter 1. The human mind always searches for confirmation. Human beings fancy being right. In fact, psychologists have discovered that our brains naturally seek information that confirms what we already believe. This is called confirmation bias. Confirmation bias is the tendency to search for, interpret, remember, and favor information that supports our existing opinions while ignoring information that challenges them. Think about it. If you believe a particular football team is the best, you'll notice every victory they achieve and explain away every defeat. If you believe a certain politician is trustworthy, you'll focus on their successes and dismiss their failures. The same thing happens with insurance. If someone already believes insurance is a scam, every rejected claim becomes proof, every complaint becomes evidence, and every negative social media post becomes validation. What about every successful claim? That often gets ignored, not because it didn't happen, but because it doesn't support the belief they already hold. Chapter 2. The Insurance Double Standard. Let's perform a simple thought experiment. Suppose you buy a smartphone. After 6 months, it develops a fault. Do you conclude that all smartphones are scams? Probably not. You may complain about the manufacturer, demand repairs, or even switch brands, but you don't reject the entire concept of smartphones. Now, suppose a bank delays a transaction, Do you close your account and declare that banking itself is fraudulent? Again, probably not. Yet something different often happens with insurance. One disputed claim can cause someone to conclude that the entire insurance industry is dishonest. Why do we apply different standards? Partly because insurance deals with emotional moments such as accidents, illnesses, deaths, and losses. These are stressful experiences. When expectations and outcomes don't align, emotions become powerful, and emotions often influence our judgment more than facts. Chapter 3. Why bad news spreads faster. Psychologists have another term called negativity bias. Negativity bias refers to our tendency to pay more attention to negative events than positive ones. Bad news captures attention, gets shared, and remembered. Imagine two headlines. Headline 1. Insurance company pays claim successfully. Headline 2. Insurance company rejects claim. Which one gets more clicks? Which one gets more comments? Which one gets more shares? We already know the answer. The second one. This creates a distorted picture of reality. Because while disputed claims make headlines, successful claims usually don't. Chapter 4. The stories we don't hear. Every single day, insurance quietly changes lives. A family receives medical treatment without selling their property. A widow receives a life insurance payout that keeps her children in school. A business owner recovers after a devastating fire. A motorist gets their vehicle repaired after an accident. A retiree receives pension income after decades of saving. These stories happen every day, but they rarely trend online. People don't usually rush to Facebook, LinkedIn, or X to announce, "My insurer did exactly what they promised." Success is often silent. Failure is often loud. And because failure is louder, many people mistakenly assume it is more common than it actually is. Chapter 5. Insurance is a promise, not magic. One of the biggest misconceptions about insurance is the belief that every claim should automatically be paid. Insurance doesn't work that way. It operates under agreed terms and conditions. Just as a bank loan has repayment requirements, insurance policies have coverage conditions. This doesn't mean insurers should reject claims unfairly. Far from it. Insurers must remain transparent, ethical, and accountable. But it does mean that understanding your policy is just as important as purchasing it. Many disputes arise not because insurance is a scam, but because expectations and policy terms were never aligned from the beginning. Chapter 6. Ask better questions. The next time someone says, "Insurance is a scam," pause before accepting that conclusion. Ask questions. What type of insurance was involved? What exactly happened? What did the policy cover? Were all disclosures made? Was the loss covered under the contract? Was there another side to the story? You may discover that the situation is more complex than the headline suggests. Good decision-making starts with curiosity, not assumptions. Chapter 7. The cost of confirmation bias. Confirmation bias isn't just a psychological quirk. It can be expensive. When people reject insurance based solely on one negative story, they may leave themselves exposed to risks that could have been transferred, like medical emergencies, motor accidents, property losses, loss of income, or death of a breadwinner. These risks don't disappear simply because we choose not to insure them. The danger is that by focusing only on negative examples, we may overlook valuable protection that could help us when we need it most. So what is the lesson? The smartest approach is neither blind trust nor blind skepticism. It is informed decision-making. Listen to the negative stories, but also listen to the positive ones. Read the policy, ask questions, understand the cover, and make your decisions based on evidence rather than emotion. Because one friend's bad experience may be a lesson, but it should never become your entire understanding of insurance. If you believe insurance is a scam, your mind will search for evidence to prove it. If you believe insurance creates value, your mind will find evidence for that too. Wisdom lies in examining both sides before reaching a conclusion. That brings us to the end of today's lesson on confirmation bias and insurance. Why one bad story often drowns out 1,000 good ones. If this video has given you value, kindly like, subscribe, and share it with your friends and family. And let us know in the comments. Have you ever seen confirmation bias influence how people view insurance, investments, or personal finance? We would love to hear your thoughts. Thank you for watching Insurance World TV. Until next time, stay informed, stay protected, and remember, good financial decisions begin with good information.